Last trading week ended on a positive note. The U.S. employment data showed that there is no threat of a recession for the national economy. Besides, the ongoing banking crisis seems to be under control. Since the start of the year, the fourth bank in the United States has gone bankrupt, and this time it was the First Republic Bank. As was announced last week, First Republic Bank would be taken over by JPMorgan Chase Co. The US dollar index, which measures the value of the greenback against the basket of 6 major currencies, stayed almost unchanged last week and was hovering near the level of 101.30. It seems that traders began to doubt that the Fed's tightening cycle may soon come to an end. The U.S. Department of Labor recorded the highest increase in wages in the last 9 months, which is a clear sign that inflation will rise again. This Wednesday, May 10th, markets will be waiting for an official report on consumer prices for April. The incoming data will determine the market sentiment regarding the U.S. dollar. The euro-dollar pair closed the week just where it started at the opening level of 1.10. Traders were digesting the results of the US and the European Union Central Bank meetings. Both regulators met market expectations and raised the rate by 25 basis points. The ECB slowed down the pace of tightening after considering the effect of high rates on the economy. Unlike the Fed, the European regulator admits that the tightening cycle will continue. The buyers of the British pound pushed the price higher so that it gained 0.5% by the end of the week. The quote broke above the resistance level of 1.26, which has been a strong obstacle since June last year. The Bank of England is also expected to continue its fight against inflation and to raise the rate by another 25 basis points this week. By August, the rate is set to reach the target of 5%. Notably, high interest rates have not affected the economic development of the country. Business activity in the UK is growing at the highest level in a year. The Bank of Japan is the only regulator that sticks to its ultra-loose monetary policy. At the same time, the central bank officials said they were preparing to cancel early recommendations that required the rate to stay at the current lower levels. Analysts expected the Bank of Japan to adjust its policy in April when Kazuo Ueda took over as a new central bank governor. But so far, Kazuo Ueda has refrained from any serious changes. The demand for the yen has been shaped mainly by the risk sentiment. Concerns over the US banking crisis made the yen more attractive as a safe haven asset. Meanwhile, gold traders closed their buy positions last week. The precious metal could have closed the session with good gains, but the asset failed to hold at the current highs. The jobs report in the United States convinced investors that the US economy will avoid a recession. As a result, gold added plus 1.32% at the end of the week, and the quote reached the level of $2,072 per ounce, amid expectations that global central banks will pause their rate hiking cycle. Oil was among the biggest losers last week. Brent ended up at $75 per barrel. Apparently, investors are worried about energy demand that may fall amid a slowing global economy affected by high interest rates. The unexpected contraction in manufacturing activity in China amid weakening global demand also clouded the outlook for the world's largest importer of crude oil. On the supply side, Russian oil exports topped 4 million barrels a day last week, despite the country's pledge to cut production. And this has sparked a speculation that Russia might increase its oil exports to maximize revenue. You have watched Combat review on a forex and commodity markets on the InstaForex TV channel. We wish you profitable trading and subscribe to the channel and follow news with us. See you soon.